The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen. Lovely to have you here with us today. And good morning to our friends in Australia. And a little past midday for our friends in New Zealand. Now, how's the volume, folks? Can you all hear me all right? Just type a note into the questions box, will you please? Mark, good on you, mate. How you trading, Mark? Mark's one of my star pupils. He's an engineer in the States and been absolutely knocking him out of the ballpark with his paper trading. He's a tutorial client. And now we're having the struggle. Oh, going well, making some real dollars. Now we're having the struggle with Mark of switching from paper trading to real money. And let me tell you, folks, that when you've got $1 invested, it changes how your brain works slightly. The brainwave patterns change, but you can beat that with practice and training, which we're in the process of doing. So lovely to have you all with us. Got some lots of our old friends here as usual. Alan, another Albert. Yeah, Albert, Bitcoin and your things you're interested in. I can talk about that. We don't have any charts for that, Albert, but if you do, yeah, it'll work off all the Daniel Code ratios exactly the same, no change. Alex, Anthony Di Domenico up there in Chicago. Chris, Amon, Chase, my nemesis for smoking. Hello, James. That sounds good in Adelaide. That's the thing. Daryl over in Mossman, my mate. Hope things are going well for you, Daryl. Hope things are improving anyway. Daryl's had a tough trot with his personal issues lately. Donnie Maydell up there in Canada. Good on you, Don. Janet, the lovely Janet over in Canada as well. Western Canada, far Western Canada. All right, Janet fell over and broke her ankle very badly a couple of months ago, but she's on the mend now. Demon trader, Janet, good trader, very keen. Done about 3 tutorials. Justin, he's a tutorial guy too from down the Hunter Valley. I guess Dad's with you as well, Justin. Mark Andrews, one of our bunch. The lovely Marilyn, who's getting through her tutorial. Pretty amazed by it all. Mike Murphy, the same. About time we caught up again, Mike. Any of you tutorial guys, incidentally, and gals, whenever you want to talk to me, you can. If you're ready, shoot me an email and we can set up another session. Rose is with us. Rose from Missoula. Hope I said that right, Rose. Lovely to have you with us. Nice to have ladies with us. I'd like to say hello to the ladies in particular. We don't have many of them, and we should have a whole lot. So, okay, let's see what we're doing here. Let me see what you're seeing. Okay, so let's move on. Going to be a bit different today, folks. I want to take you a bit past the day-to-day battle with price and time, and I want to show you some of the other work we do that you haven't been familiar with. The Daniel Code is something I discovered many years ago. Now I guess it's getting to be many years ago now, as time rushes past, and it's a completely unique and different way of looking at markets. It doesn't stand on the shoulders of anyone. It comes completely of its own. Those of you who've done tutorials understand all of that. But with the website, the website's a fairly basic, danielcode.com. It's a very basic application of the website of the Daniel Code principles, and it's basically for newer traders. It's what I started off with the first time I released this stuff to the public. Not so public, but privileged members, I should say. And it's optimized. The trading situations in the website are optimized for safety. Then as you move on from there, many of you will do a tutorial and we'll teach you how to stay in trades longer. And how to maximize your profits. There's another level above there which is not available to general members of the Daniel Code or clients at all, and that is the work I do for very big investments. And I haven't talked about that with you much, but simply because it's not suitable for most of you. It has substantial risk, substantial commitments in that sort of trading, but I wanted to go there a little bit and just touch on that today to show you what's possible. I'm going to show you in the process the returns we had for 2015 for our big investment pool. We've did much the same in 2016, and we're way ahead of it in 2017. So for those of you who think markets aren't moving, let me tell you the dollars say otherwise. Let's move on. I rather like the story of three blind mice, and it's an old English story tale. Many of you, I guess, won't have heard of it. I did. I'm probably older than most of you. And it was a story tale that was taught to me, and it then became, it's what in English they call it a round. It's a form of group singing that, some of you will know what that is, where one group will start off with one line and the next group will start off with a line behind, and they harmonize. But anyway, the poem of Three Blind Mice, or this is a nursery rhyme, really, isn't it? Says, three blind mice, see how they run, see how they run. They all ran after the farmer's wife, who cut off their tails with a carving knife. Did you ever see such a sight in your life as three blind mice? The point is that no mice were harmed in the original version. That's a version that was much updated. There's sort of some English history around this relating to one of the British monarchs. But the original version, which you can read on Wikipedia, doesn't make much sense unless you can read the Old English. But in the original version, no mice were harmed, I can assure you. But it seemed to me that this was a good way to talk to you today about time and price and angles. So they're very important, and I think most of us probably have no idea what these things are actually telling us. Here we are. You can see on every chart that you have your x-axis, which is price up and down. You have your time axis, which is the y-axis of every chart. And you have an angle. And angles, of course, all have quantities of time and price. And there are certain types of angles that are very, very valuable to us because they foretell the future to some degree. Now, let me restate what I often say to students. We do not have foreknowledge, and we don't know what the markets will do tomorrow. And nothing in the Daniel Code actually speaks to quantum. It speaks to time and price, but not quantum. But what we can do is we can develop a set of rules such that the probabilities, remember, everything in life is about probabilities. A really silly example is that you all think the sun's going to rise tomorrow morning, and it's going to rise in the east. The reason you think that is because it always has. Your experience is that is what has always happened in your life. And as Solomon tells us in Proverbs, what has been is and will be again. And that is a very, very high probability. In fact, it's the highest probability, because if it doesn't happen, we'll all be dead. But there are all sorts of lesser probabilities coming down from there, and we run our life on probabilities. We go out in a car and we drive to work, most of us, and we say, okay, the probabilities are that almost everyone else is going to obey the same driving rules that I am, and if they do that, I will be safe. Now, that's not a certainty, because there are car crashes all the time. There are idiots everywhere on the roads and elsewhere. But that's how we live our lives. We live it on a series of probabilities, and we make decisions based on probabilities. And that's what we do in trading. And as the probabilities get higher and higher, so your trading gets higher and higher. Chase. I'm going to give them up one day, but they're so good. They're so good. Excuse me. So price is what we call the first degree. This is the x-axis, and this is a daily chart of crude oil. And you can see pretty simply that price has two patterns, and it actually has two patterns only. It's either consolidating, which is the area you see in the triangle up in the left-hand side, top side of the screen, or it is trending. And trending is the thing of great beauty. And you can see on this chart, this just happens to be crude oil. This is the 057 continuous contract, which simply takes each individual front month and pastes it together. You can see the angles of these three big sweeps down that we've had since February 2017, and the two major rallies up. You can see the angle on them is almost parallel, which is pretty interesting. And I can tell you that this trading since the breakout in late February to date has returned something of the order of 37,000 per one contract. So the possibilities of futures trading is something that I don't know that anyone actually understands them as well as I do. I don't wish that to sound conceited. It's simply that I look at markets in a different way, and as you'll see, the possibilities of what you can do with futures are quite extraordinary. That doesn't mean that what I'm going to talk to you about later on today is for you. What I teach you is to trade safely and with minimal financial exposure. The big trading fund that I have mentioned, I control it, so it's my risk and my decisions. And if I wish to take more risk, that's a different thing, because I understand risk very well. I've been doing this for over 30 years, every day of my life. And the Daniel Code gives you insights that are beyond most trading programs. And it's a different sort of knowledge. I'm going to try and show you some of that today, because what I really want to do is I want to excite you all about how well you can do at trading, about how much money you can make at trading. And what you get from the mainstream press. They're talking about trading stocks. They have a 10, 15, 17% year. They think, gosh, that's so wonderful. To us, if we had those sorts of years, we'd cut our throats. We make more than that a month, every month, let alone, and sometimes a lot more. So let's move on. This is price. It's the first degree of charts. The first degree of markets. Price is the best known market feature. It's what we see most readily. When you look at a chart, your eye goes straight to that idea of price. What is it? What's the price? Has it gone up? Has it gone down? And price is measuring the present value of our decisions. You know, did we buy this thing and it's gone up, or did we buy this thing and it's gone down? And it dominates all else, and the media is fixated on price because they don't understand anything else. And it's the simple thing, it's the obvious thing, it's the shiny car in the front of the sales room, isn't it? It's what grabs your eye first. And unadorned price is just a marker. It's just a blip on a chart. It's simply telling you what the price is today, and if you go back, it'll tell you what the price was in previous times. But to most people, that's it. It's just a marker. It's a scorecard, if you like. But there is much, much more to price. Price is part of the trend equation. And I'm going to show you today how vital this thing trend is. I was speaking to one of my students yesterday, Alan, who's here with us today, and we were going through his trading on his spreadsheet. I'm mad on making people do lots and lots of paper trading, and I always say you're not going to be able to match those results perfectly, because you get slippage, you get bad fills, you get all sorts of things happen in real-time trading, but it will at least show you the possibilities, and the closer and closer you get to those possibilities, the more excited you'll be and the more successful you'll be. But in Alan's spreadsheet he sent me, the first column was headed trend, as I told him to do, and there was nothing in it. He hadn't written down the trend, so he was trading by not knowing the trend, which is actually what most traders are doing. Most people, trend is very obvious when that part of the chart is finished. You look and say, oh, the trend was up, I knew that. Trend was down, I knew that. But very, very few people can tell you what it's doing in real time. And the real secret of trend is that you can't talk about trend without specifying the time frame. And within those time frames, there will be different trends. So markets can be in an uptrend on the weekly chart and a downtrend on the daily chart. Uptrend on the daily chart and a downtrend on the hourly chart. All these things are possible. And it's what you have to know to be a trader. The next thing about price that you don't see is that it's part of the internal market speed equation. By that I mean all markets have a speed that they're trying to run to. They have their own internal clock. And that changes over time significantly, thankfully, because I run some very sophisticated trading systems based on market speed, the results of which I'm going to show you later on. What happens with price bars, remember to us, the minimum time frame we trade are daily bars. Now, why is that? Well, that's simply a choice. It started off as a choice because I've traded everything you can think of down to trading 3 tick bars. And for many years, living in the other side of the world to most of you, I would be up all night in front of screens trading. Short-term chart, anything you can think of. And eventually I got to the stage that I realized that emotionally day trading is just too drains you. That wears you out. You'll burn out. Most day traders do. Not all. I know a couple of day traders who are very successful, but most of them burn out and you have emotional whipsaws. And I then got to the stage that I didn't want to be sitting up looking at charts. So I then designed the main parts of the Daniel Code so they would work off daily bars. So what you do now, if you understand the Daniel Code, is you get your end of day data download. You'll spend no more than an hour analyzing many markets as you like, 5, 6, 7. I trade about 11 most of the time. Sister Sage does 50. She's a very energetic and very skillful trader. And one of the very first people I ever taught the Daniel Code to, Sage. Not sure if she's with us today or not, but she'll certainly catch up with the recording if she's not. The internal speed equation, it's price, that will tell us, as I say, going down nothing shorter than daily bars. Price tells us what the market's doing with its speed equation. Is it ahead of time and trying to slow down? Is it behind time and trying to speed up? Or is it on its internal time market? And the next thing about price, it tells us what that price cycle, what that time cycle, the internal market cycle is. Price is also the prime signifier of risk. The only true support and resistance that you will see on any chart are the Daniel Code ratios and true highs and true lows from daily charts. And that's the biggest problem with intraday trading, that very often you're trading parts of a bar that are actually an inside bar on the daily chart. And when you're at an inside bar, there is no true support or resistance. There's minor support and resistance if you have to be trading those shorter time frames, but I don't recommend it. The next thing about price, it speaks of growth and endings. Price will tell you, properly understood, if the market is expanding its trend or shrinking its trend. And interestingly, trend endings come on both. Sometimes they come on shrinking of strength, of what's the word I'm looking for? Power, interest, excitement. At other times, they end on a great expansion. They end with a huge blowout bar. But you need to know what cycle they're on in there. And on the smaller level, price gives us the go, no-go of continuation trades. Most of the emphasis at the Daniel Code website is about turns, but big money is made on the continuation trades, particularly when you have a trending market. And it's price bars that give us the go, no-go of continuation trade. So it's a vital input. And it's the major traffic cop of our daily beat. It's telling you whether to keep going, whether to stop, whether to take profits. All of these things come from price. So it's a whole lot more important than you think it is, and there's a whole lot more in it than most of you are seeing. Time is the second degree of market. We call it the first degree was price. Time is the second degree, and it's the least understood and therefore the least appreciated base of market structure. When I was starting off in this business and trying to learn how to trade, like most of you, or trying to learn more, some of you I know are very good traders, very seasoned traders. Tom's with us. He's a wealth fund manager. His boss, I don't know if he's with us or not, David. We have a number of professional trading people who are very good traders. And of course, no matter how good you are in this business, you're always trying to learn more. We always want to learn more. And I actually pretty much wake up around about an hour or so before US markets close, and while you're sleeping, I'm thinking. And what I'm thinking about all day is I'm thinking about how do I make this better? How do I learn more? What did today's price action tell me? What is it I got? What is it I missed? And why? And that's a continual search. So time is the second degree of markets, least understood and the least appreciated. I was telling one of my students the other day that in this process of when I was trying to learn about trading, I did a great search of the written universe and the teaching universe. And being an attorney, I thought you could learn from books and lectures and some practical experience. That's how you learn most everything else in life. And in that process, I went and spent a lot of money with a lot of famous people who teach trading. Everything from W.D. Gann, on which I am the expert, because I spent 12 years on that futility, to the very modern, the big names in the trading business. I went to all their seminars, lectures all over the world. And one of them said to me, scornfully, he's still a very famous trader. He's a great promoter, so his name's in the media often. He was having a joke about time and saying time is completely useless as a trading tool. He said if you're trading time and you've made had some wins, or you go to your bank and say, look, I've made 4 hours of time, they won't be impressed and they won't want to lend you any money against it. But he said if you go to your bank and say I've made 4,000 points in trading, they'll be terribly impressed and all sorts of people want to get involved with you. So for a long time, I ignored time based on those words, which was a shame because it set back my development by a long way. And in fact, time in many respects is more important than price. On the macro scale, it's critical to creating the fourth degree, or what we call the fourth seal. Means the same thing. It's the bringer of ending trends and important turns on the long-term charts. It doesn't help you much in your trading. I know some of you are very interested in that, and I'm more than happy to teach it to you. But once you've got those turn points, which we do on the website, Frank DB, a student of mine, does most of that for me these days. And we have fourth seal coverage of a number of important markets on the website that you're welcome to see. But then to trade it, you have to go down to your daily bars, because when you're working off 6 and 12 and 24-day bars, the risk is just too great. You're way outside your risk parameters, so it's not something you can actively trade, but it's interesting to know. And even though I tell you clearly we do not have foreknowledge, it's very interesting to see how this analysis will pick up crucial turning points in markets and then just watch them coming. So you need time to have the fourth seal. So on the micro scale, which to us means daily bars, time creates standalone directional trade signals which are extraordinary. In the process of doing our tutorials, I teach you or our students, all of which are you at some stage, I guess, trading price, which is fairly traditional. Most of you know a fair bit about that. And I teach you about trading time. And what happens in reality is that people just trade, most of my students just trade time and nothing else, time signals. And I've said to you at the bottom, you have many students who are seeing elite returns using nothing but time signals. Now, what does that mean? Well, it doesn't mean 50%. It doesn't mean 100%. It means something north of 6 or 7 times margin, okay, on an annualized basis. And that's extraordinary. I don't actually tell you what you can get from these individual contracts because I'd like you to just work it out for yourself when you're doing the tutorial. I don't know anyone else who's ever said that those sort of returns are possible, but we have a number of people doing tutorials who are knocking that out in their paper trading. Yes, I know it's only paper trading, and yes, I know you won't get the same results, but you will get very close to them with real money trading if you keep the same level of discipline. So think about that. Somewhere north of 5 or 6 or 7 times margin. Now, margin is your cost of trading. I know that it's more common to express returns on the size of an account, but that's a fallacy because what you actually invest when you're trading is margin. Brokers won't let you trade unless you put up margin. And once you've got margin put up, you may not even be using the full margin. Your stops may actually be smaller, considerably smaller than the margin. So what you're actually risking is the stop loss, plus or minus a variance almost all the time. But the reality is that the margin goes out of your account when you open a trade. So that money's gone. The opportunity cost of using it is not there. It can only be used once while you're in that trade. So you have to express your returns as a percentage of margin. And I do that all the time. Okay, the third degree of markets is volume. Volume used to be very, very important. It's not so now. Markets have become incredibly fragmented. There are all sorts of different derivatives dealing in essentially the same stuff. There's a ton of off-market derivatives organized by big trading houses. There's a lot of over-the-counter OTC derivatives deal in essentially the same product. There's massive gold, for example, the London gold market, bullion bank pricing, setting of the gold price by a committee, which to me is just crazy stuff, but that's been the traditional way in that part of the world. So volume has become very much less significant because we don't know what the true volume figures are anymore. If you were only to look at, for example, the COMEX gold volume, you would have a figure that is all right. It is not the absolute figure that matters. It's a derivative we're talking about with leverage built into it. It's only relative to previous periods that it's important, but there's so much gold traded in other ways, in all sorts of other ways, that volume has become irrelevant. And that's the same for other markets as well. So we don't use volume anymore, which was the third degree. We move on straight to the fourth degree of markets, which is an angle. And there is a particular sort of angle that we call the fourth seal, which forecasts future turning points. You've seen this chart before, folks. I just want to show it to you again for those of you who weren't with us the last time I showed it to you. This is really basic time signals. These are 29 days time cycle, first of the Daniel Code numbers. And this is in gold, and it's running from June 2016 to June 2017. And you can see there that there isn't a turn that's occurred anywhere except at one of these signals. This is the other side of that. These are the 29-day time buy signals in gold. Same thing, every important low here is marked with one of these time buy signals and a few that weren't so important as well. Remember what I said earlier, that nothing in the Daniel Code tells us about quantum. One of these signals may give you 6 months, and I don't know, in here we had a time buy at about 1200 that ran all the way up to 1350. You can also see other ones that really just gave you a 3 or 4 day counter trend. So you need to know how to trade them, but the point here to be made is that important turns almost always happen at one or more of these time buy signals. And remember, this is just one of them. This is the 29-day cycle that I'm showing you. There are many others. Markets turn in price at and only at known Daniel Code price ratios. And markets turn in time at and only at known Daniel Code time cycles. And when time and price are squared, which means time is at a known time cycle and price is at a known time cycle, they don't have to be the same time cycle. This is not Gann stuff. This is not 1 by 1 lines or 1 by 3 lines. It's simply time at a known DC ratio and price at a known DC price level. That we say then time and price are squared. And when time and price are squared, a turn is almost inevitable. It's quite extraordinary. And I've made this point to you before, and if you are dubious about it, I invite you to go and have a look at the Daniel Code website. Click on Chart Archives. You'll see about 36,000 of my charts in there that I've been producing since I've been producing them publicly since late 2007, I think early 2008, and you'll be struggling to find a market that's turned anywhere except at a Daniel Code number. Now, why is that important? One of my clients said to me the other day, well, John, you show the markets getting to these numbers, but what does it mean to us? They can go on to other numbers. They could turn at an earlier number. The answer to that is yes. But if this is the only piece of knowledge you ever have in your life, that markets will not turn except at a DC price cycle, then you can get rid of a whole lot of other turns, pseudo turns, can't you? I mean, the bane of most people's trading life is 1 bar counter trends. I guess add that outside bars. But those counter trends, the vast majority of them are happening at a form of resistance, but they're not happening at a DC number. Now, DC numbers will cause counter trends, but put that in the positive way, markets will only turn at the DC numbers. So if you have those numbers on your chart, you have a huge advantage that others don't have. You have something that you see that the rest of the world is not seeing. And every time you have an edge on the market, the longer you trade, the more that edge improves and improves. Okay, we're now moved on here. I'm showing you one of the prime functions of price is to identify trend changes. This is oil, which we've been doing a lot of work on lately because it's been so spectacular. And this is oil pretty well for the whole of 2017. Have a look at these trend change signals I've put on there. Some of them are like really simple. If you get towards the end of the chart, I'll just get my highlighter here. I think they call it the spotlight. Here we are. Here's a spotlight. Some of them are really, really simple, like this bar here in July and this huge outside bar here. Let me just bring up that chart so I can give you a date. It's pretty obvious, but it's nice to see the date. Just scrunch these up a bit so I can see them all. Here we are. This one back here I'm talking about was May the 25th. They're really simple and you don't see them till they're over. But look at these other ones, which are much more subtle and much more important. This trend up here came 2 days after the chart low. Remember, there's two different types of highs and lows. There's the chart high, chart low, and then there's the true high, true low. This is 2 days after the chart low. Look at this turn up here. You got this trend. This is a trend turn. You should have been able to identify it from this bar, which is going to be, let me see, let's bring this chart over a bit further. Here it is. It's pretty subtle. That's, if I'm looking at the right bar, that's April the 17th of this year. It's 2 bars after the high. And if you could have identified that as a change in trend, it changed your trading for all the way down. Same with the trend up signals you can see. These identification of changes in trend are happening 1 to 4 days after the chart high, chart low, and 1 to 3 days after the true high, true low. And the ones that the rest of the world doesn't see are sensational. If you knew with a high degree of probability on April the 17th that the trend had turned down, and equally you knew with a high degree of probability that by May the 9th the trend had turned up, the money in those moves is just huge, just huge. So that's the most important part about price that you're probably not seeing. It is part of the equation to tell you when trend has changed. Any questions, folks? There's a few coming in. Just go ahead and type them into the questions box. I will answer them when I finish this presentation for you. So go ahead and put your questions in there. This is some advanced trading that you won't be aware of. Part of the game of trading is to, and it's a thing that frustrates a lot of people, is to know when to take your profits, when to exit. It's a very advanced skill. It needs a fair degree of support to do it. We don't offer it as a service on the website or even at the tutorials because it's complex. But I wanted to show you what's possible. This again is oil. This is the recent run of trading we've been doing. And you can see that this exit on close strategy, when those conditions, and there are very definite rules about it, you can see that in the big rundown, particularly this one, which caused people in northbound trouble, May the 5th, it's this one right here. This big key reversal bar off the low, huge momentum bar down, you're undoubtedly short, and this advanced trading actually told us to exit the day before. There's another way that you could have protected those profits as well, which I'm going to show you later, a simpler way that is suitable for private traders. But if you, this chart came about, one of my clients, a private client, is trying to reduce a different part of the Daniel Code to a computer program. And he's been doing it for over 2 years, Michael. He's a Melbourne bloke, lovely bloke, very good guy. And he's been trying to put this into a computerized program. There are a couple of real problems with that, which the fact that it's been going over 2 years, I mean, he's got a full-time job. He's works for a big financial institution in Melbourne, a very senior capacity. But the fact that it's taken him 2.5 years tells you it's complex. But on a run, a random run that the program he's working on produced, it was about 50 days in oil, and it had a profit of $230 after about roughly, off the top of my head, maybe 40 odd trades. The interesting thing was, if you halved the losses, it was peppered with big losses, 1,600, 1,800, 2,300, 2,400. You know, that's getting up not far from margin. Margin in oil is 27.50. If you could knock out 50% of those losses, which is really easy to do if you know what you're doing, you will you turn that $240 profit into about 4,800 profit for 50 days. And there's 255 trading days in a year. So you can take that 4,800, multiply it by 5.1, and you can see this program's heading for about 25,000 per year on a margin. I've just told you the margin, 25,000 thereabouts. The margin is 27.50. I'm pretty sure, but there'll be someone who'll correct me if I'm wrong. There always is. I'll tell you a funny story about that in a minute. Yeah, 27.50 is the margin for crude oil. That's sort of north of 800% in a year. Pretty extraordinary stuff. Now, same thing, that's paper trading, that's machine trading, which is worse than paper trading because it doesn't always know which way the outside bars go. But, knock off a couple of 100%, it's still very, very elite trading, isn't it? So this is the possibility of advanced trading. Have a look at this big run up here. This was, when you look at your oil charts, this is the run up into July the 4th. Okay, if you were on a 2-bar trailing stop there, you lost a lot of money. You shouldn't have been, because the fast stock was overbought. You should have been in a 1-bar trailing stop, and you should have been out at what I've got on there is 46.74. You should have actually been out. 46.74 is exactly where you're one tick lower. 46.73, 46.72 is where you should have been out. But if you didn't know how to manage your stop, look, you gave back all that lovely money. There's that lovely run up there. There was a there's your long. You're long from let's see, right here, June the 26th, $3,500. Excuse me, for one contract, for just moving your stop. There wasn't even one counter trend in that run. Absolutely beautiful stuff. Doesn't happen often enough. When it does, you just want to say thank you and grab it. But you needed to have your stop in the right place, which was also your new entry for the sell signal. There was a sell signal on that date, that big bar down, and it was the bar of 0704 that created that sell signal. Get you short on the 5th of July. Lovely trading. Okay, let's move on. I wanted to keep showing you this stuff. These are our results, folks, for 2015. Crude oil, one contract. This is for our private fund, and it returned 71,590 after commissions. This is not for you. This is very advanced trading. It involves risks that are suitable for my sort of trading, not suitable for your sort of trading. And we don't offer this product to anyone. It's just, excuse me, for our private fund, but we have some large corporates involved in that. You need to be fairly sophisticated to undertake that sort of trading. But as I said earlier, I'm trying to excite you, show you the possibilities in trading. This is possible. 2016 was much the same, thereabouts. 2017 year to date is actually going better. So we've got some huge some huge trading opportunities in front of us. And you do the same thing in futures, in Forex. The thing about Forex is that it's not as highly geared. And I wanted to show you, I said that I would show you what happened in this big low here of, this is April the 5th, folks. Look at this. It's this bar right here, April the 5th. I think you can see that, April the 5th. So you were short running down there. If you didn't know to get out, I got out the close of the bar before, which was close enough to perfect. Why? Look where it closed. Look where the close is. I'll just bring over this highlighter to make sure you understand this, because it's important. Okay, so this big bar here, the big key reversal bar, this is April the 5th, 2017, and it was a Friday. Go back to the bar before, it's Tuesday. Look where this bar closed. We had a Daniel Code red line there at 45.49. The close of this bar is 46.19. The low of the bars 45.97. And there's a red line at 45.49. That's target recognition. That's telling you something. Go back a little bit and look at this. Here's this low, which is 1, 2, 3 bars back. This is April the 2nd. Okay, look where this bar stopped. The low of this bar is 47.95 against the DC number at 47.39. Now, remember there's 100 ticks in each point. So if the big number is 47, there's 4,700 possible ticks in this number. And we're talking about a handful of ticks variance. Go back a bit further. See what was happening back here. Look at this. Here's this little bar in here. 1, 2, 3. This bar's got a close. Remember, target recognition is valid on the high, low, or close. The close here is 49.89 against 49.27. The next bar opens right on that number. 2 bars later, it opens right on that number. 4 bars later, it opens and closes right on the number. The next bar after that, it drops down to the next Daniel code number, and stops there. Okay, that's what it does. Little tiny bar doesn't mean anything if it's unadorned, as I say, but the low of that bar is 49.14. 48.57 is the number that we're looking for there. Where am I here? Oh, I'm on the wrong chart. This will help enormously, folks, if I get the right chart. I'm on the front month. We weren't in the front month then, were we? In fact, where we were in the June contract. And the low of that bar is, in fact, in the June contract, 48.59, which is what we're looking at here. 48.59 against 48.57. Now, this is about the time that you all get bored and stop listening, which is why you can't trade. This is the vital stuff. Once you see markets having target recognition as exact and specific as this, you say, oh, wow, what is this market saying to me? Markets are trying to talk to you. You don't understand this and you don't want to believe it. But I promise you, markets are trying to talk to you all the time. And what the market is saying, incidentally, some are better than others, but they're all good. Some are fantastic. This is one of the fantastics. It is saying to you, I know and understand these numbers and I'm tracking them. So we come down here. We have target recognition on the close. We have target recognition on the open. Again on the open and the close. Target recognition on the close, all to within a handful of ticks. Target recognition at the close. This market has been tracking the red and black line all the way down from its high. Here's its last bar. This is the bar going down here. If this is still in the, this is the 057 contract, this close is 45.52 against 45.49. That's 3 ticks out of a possible 4,500 ticks. If you don't get that this is important and you're not interested in it, my advice to you is stop trading. If you want to be a really, really good trader, you have to be interested in this stuff because it's what makes the Daniel Code different to every other trading program. You have specific numbers and the markets will say to you, I'm tracking this sequence or I'm not tracking this sequence. And right here, it's roaring to you, I'm tracking this sequence. Okay? So what happens here on this next bar, which turned out to be a huge loser for a lot of people? This is this big key reversal bar. It was the end of the downtrend. This is 0505. There was a blue line underneath it at 43.76. Down it went. It hit that number. Look, I put that number on today. I remember I was talking to John down in Coffs Harbour about this. The blue line was not far. It might have been 3 or 4 ticks difference. And when it hit that blue line and reversed, remember it's been tracking the red lines all the way. Okay, here's the previous blue line back here. Not bad. Here's the little drop-off bar. This has got a low 48.20 against 48.23 blue line. It's saying, I know these numbers, I understand them, I'm following them. When it hits this number and reverses, and it takes out its own open and the previous day's close, by definition, it's making a key reversal bar. If you knew nothing else about trading, that's where your stop should have been, because that's market action. That's why markets turn when they hit support or resistance at the Daniel code and time is up. Excuse me. And time is up. Okay? You have to have these numbers. If you don't have them, most people in the world don't have them. Very few people do have them. We're a very small group at the Daniel code, and the world doesn't really like doing the mental work to understand this. But if you knew that alone, look at what it saved you. Okay? It saved you frustration. It saved you losing profits. It sets you up for the next turn. Here's some other charts. I'm simply trying to show you that markets run to these Daniel code numbers all the time. Here's the S&P E-mini, including today's, let me find a chart here. This is including today's price action. And you can see that here it is. It made its this low, this particular low here. The contract's rolled over since then. This low was made back in May. I don't know if that was the June contract. We're now on the September contract. Look where this low was. This is a big outside bar. The date of which is, I'm getting there, folks. Bear with me. I've got a number of computers running here. This was June the 29th, 2017. It's this bar here. Look at this low. Okay, the low of this bar, 2402.25. The Daniel code red line is at 2402.75. Mac Criddle, how do we calculate these numbers? You get them from the Daniel code tool. Mac, we have a tool that puts these numbers on all of your charts. It's called the Daniel code retracement tool, that one. The blue lines are published under members charts. They're published twice a week at the website. You go to the website, you click on the charts you're interested on. For the ones that don't have detailed blue lines on them, I give you the trades. I tell you there's a blue line buy or a blue line sell. But these red and black lines come off the Daniel code retracement tool, which you don't calculate. If you can click on a low and drag it to a high, it'll put all the numbers on for you. Look at this. Look at the way this thing bottoms that number. Look where it is today. It's still running on these Daniel code numbers because it's what markets do all the time. This is gold. I have a funny story to tell you about gold. I don't want to interrupt this, but I'll make sure I tell you before we finish. Look at this. We had a buy right down there. That 1205.8 low in gold. On the blue line, GC3, 1205.8. The setup bar, which is the bar before that went through, the setup bar is 0707. It had a low of 1206.6. Excuse me, 1206.6. That's 8 ticks. There are 12,000 ticks in that number of 1205.8. 6 ticks variance. That set up the next bar. And up it go. That trade's made a bit more than $3,000 per one contract. Pretty nice. Here's the next one, soybeans. Tom, your mate David asked about soybeans, corn, and wheat. I only got his email this morning about 4:30 in the morning, my time, and it was too late to put them in. But would you let him know, Tom, please let David know. I got his email. I'm sorry I can't give you anything in depth on those charts at this sort of notice, but if you'd like me to look at the next webinar, or any of you have particular markets you'd like me to look at, I'm more than happy to do so. Soybeans is one of the ones he asked about. Here's a soybeans chart. Have a look at it. It's just bouncing around between the Daniel code numbers. This chart's up on the website. Okay, this is one of the markets we cover. What was the high today? Here it is. Nice big bar. Looked exciting. 1,031 carat 2. That little arrowhead up in the price bar is called a carat. It's an old-fashioned way of measuring price in grains. used by the Kansas Board of Trade, then CBOT, and now it's migrated to the CME, but it's called a Karat, the little arrowhead. This one happens to be in quarters price in this market. Beans, most of the grains, goes 2460 expressed in karats. They're basically quarters. So there was the red line at 1030. Thanks, Tom. You got that. You'll let him know. I appreciate having you here, Tom. Hope life's nice down in Florida. It was cold here this morning, and we're up in the Sunshine State, the tourist area. Must have been bloody awful out on the tablelands, I promise you. Yeah. Okay, 203060. What was this high, folks? 2031.2. Okay, so from 203060, you go 2031, 2031.2. That's 2 ticks. Look at it. Markets run off these numbers all the time, all the time, all the time. I'm sick of saying it. But I know that the vast majority of you not only don't get it, but you don't want to get it because it's too hard. It requires a modicum of brain power. Not a lot, folks. What it really requires is dedication. Have a look at this chart. This is T-bonds. Had a blue line sell. You had a blue line sell here right up at this high. Why did you have a blue line sell there? It's because this bar here that has the arrow on it, which was June the 26th, it had a close of 156 karat 29 against the blue line of 156 karat 30. That's 1 tick variance, and that blue line had been on that chart for weeks and weeks. Okay, that was a blue line sell signal. They're the ones I tell you to try and hold. In this case, it ran all the way down without even one counter trend. Very, very nice. Nothing to do except manage your stop loss and get long when we gave you the buy signal, which was the TO3 signal right at the low. This market made this trade, one trade, excuse me, one trade, one contract made 4,093 on the downside. We had a TO3 buy signal right on the day of the low, as opposed to a blue line trade. And if you got long that, it has made $2,031 on the upside to today's close. You had one counter trend to overcome. That's this bar here. How you trade counter trends is very easy. And if you think you know the trend, there are a number of ways of dealing with counter trends to minimize the pain. Okay, so there we are. All right, let's move on. And for those of you who haven't already had a free trial with us, you're most welcome. Go to the website, www.thedanielcode.com. Choose your username and password, hit the register button, follow the prompts. Any problems, contact Terry at support@thedanielcode.com. He's in Canada. He's a nice young man. He'll be happy to help you. He can also arrange for you a free trial of Genesis Trade Navigator if you haven't already done it. If you haven't already done that, and Terry can enable for you the Daniel Code Library of Studies, which will have on them the Daniel Code trading channel, not the trading channels, that's a bit more advanced. It will have on them the Daniel Code retracement lines, and I will show you a little bit of that now. And here's our compliance statement, folks. Trading is risky. For the vast majority of the great unwashed, it's incredibly risky because they not only don't know how to trade, they're determined not to learn. They're determined to read rubbish on websites, okay, and to read news and commentary and all that sort of stuff, none of which will teach you how to trade. If you're really interested in becoming an elite trader, send me an email, jneedham@thedanielcode.com. I will be happy to teach you, providing that you're the right sort of person. There are occasional people we won't teach. Let's have a look what else we've got here. I didn't want to leave this without showing you this interesting chart of gold. This, folks, is a chart. This is the weekly chart of gold. We have a lot of gold bugs at the Daniel Code, and if ever I mention gold when I'm doing a tutorial, we attract an incredible number of gold bugs, not all of whom have two heads. Some of them are very nice people. I know them and I like them. and some of them are with us today. They're very rational people, but there are a lot of idiots. Back in June, on June the 22nd, do excuse me, on June the 22nd, I did a tutorial called Gold to Own or Not Own, and one of the things I showed you was this chart. This is our long-term weekly chart in gold, which you've seen many times. But I showed you this chart on the 22nd of June. Price was at 1251, up here, just above this red line was 1251, and I said these are the retracements that gold is going to go to. That black line was on this chart at 1206, and the low of this bar is 1206.6. This is a weekly chart. The variance against the Daniel Code number is 6/10 of 12,000 ticks, 6 ticks out of a possible 12,000, or 6 ticks against 1206. That was the variance. It was on there 10, 12 days before it made that low. The run-up since then has made over $3,000 on the buy cycle. If you knew nothing else except you took note of that number, you had a nice $3,000 trade, and we had a perfect buy signal at the bottom of this chart. Here it was. The low was made on July the 7th. The low was 1206.6. I've told you this. There was a blue line at 1205.8. Next day we had a key reversal bar on a blue line buy, and off it went. For the few gentlemen who wrote to me and said, you didn't do enough about gold and you didn't tell us anything about gold, I sort of kind of hope you're with us again today, because there was a real easy $3,000 trade you missed out on by not noticing that the black line, the famous Daniel Code black line, was at 1206, which stopped this market, as it often does, Mr. David. And away she went, too easy. Okay, I think that's about all I have mainly for you today, folks. Yes, we've gone through all of this, and let's have a look at the questions we have here that we've got going. Well, days in advance, do you forecast the trend down or trend up points? You can't forecast points, David. It tells us nothing about quantum, but we should be able to pick a change in trend within 1 to 3 days of the chart low, or 1 to 4 days. 1 to 4 days of the chart low, 1 to 3 days of the true low, true high, true low, same thing. Manish, give us a few time signals which are yet to happen. Any market? No, thank you. You can learn this if you want to. I'm happy to teach you. I'm not an exhibitionist, and I'm not doing this for your entertainment. It doesn't matter to me at all whether you believe any of this or not, Manish. It's up to you to find out. Albert, contract rollovers do not affect your time trades. No, they don't, Albert. We do. We can do our time trades off either of the continuous charts, the 057 or the 067, which is the back adjusted chart. Remember, the 067, anything prior to the front month will have corrupted prices in it, because that's how the back adjustment is created. But the time cycles run all the time on any continuous chart. David, the dates across the bottom of the chart are not matching up with what you were saying. April 4th bar is above May 17th date. I'm looking at a different computer, David, so forgive me. I've got a different chart that I can see, which was the front month at the time, on a different computer. So if I've confused you or annoyed you, I do apologize. Okay, how do we calculate these numbers, Mac? You can do a free trial, get the Daniel Code retracement tool. I'll show it to you right now. Here, have a look at this. Here's the Daniel Code retracement tool. Here we are. Let's take some of that off. Let's go and find a nice, interesting market. That's this one. I'll show you some stuff that I always use to show students, because it's a really lousy piece of chart, and it's best to learn this stuff on really really lousy pieces of chart rather than easy. Let me see if I can find the horror stretch of chart that I usually use. I think I've gone back too far. That doesn't look like it. All right, here's a pretty simple basis. This is a low. David, there's one swing high there. There's another one up there. This isn't the piece of chart I wanted. I wonder where it's gone. Let's see. That was too easy. There's one that's horrible and broken. Excuse me. Chase, I've got to give up these bloody cigarettes. You're quite right, mate. Okay, today's a bad day. Okay, this is the tool here. It's a little hedgehog, this pictured spiky guy. This is our hedgehog. This is the Daniel Code retracement tool. You go from any low to any high. This is the first swing coming out this low. There's the first swing. There's another swing up here. Put that on. Look at this. That's actually pretty close to your closing low, don't you think, of your high? Can you see that? You can't? Okay, let me make it clearer. We'll turn this into a closing chart. There's the closing low. The high of the closing high is at 49.63 against the Daniel Code number of 49.73. Okay, that's one swing. There's another swing further up. You can put this on to get the next swing. This is the swing number one. Just click it and drag it. I'm not sure whether this is the high here. This is a high. There's another one after it. This isn't bad to start with because look what it's given you. 49.46. This high is what? 49.33. That'll do. Counter trend high, 48.16 against 48.07. And you can do exactly the same on the way down. If you want to see where these lows are going to be, they'll come in at. Remember, this is a continuous chart, guys. If you did this on the front month, it's far more accurate. This has got two rollovers in it. But here we are. Split that over. Okay, here's the second number down. Here's your first number, 37.61. On March the 31st, the low was 37.57. So it's saying, I know these numbers and I'm tracking them. Look where this market turns. Here's your key reversal bar giving you the low. The low's at 35.24. The Daniel Code number's at 35.17. Okay? 7 ticks difference. That's all. There is nothing in the world like it. All right? And that's how you do it. Okay. So you don't have to calculate them. We do them for you. And for the blue lines, David, they are on the Daniel Code website. And all the charts are in here. Here's the S&P, for example. This chart will open up, and all the blue lines are on them, and it's closed up here somewhere today. And we have all 15 Forex pairs, currency futures, equity indices, metals, and miscellaneous. And you just go to whatever you wanted, click on them, and it will have your blue lines on them for you. They're the ones I create, and we actually put the trades in if there is any blue line trades, which there aren't for today. They'll come out if you subscribe to the TO3 Plus signals. So okay, you might understand all of that now. So thank you for being with us, and I hope you have a great weekend, folks. It's Friday morning down under. A bit after we've gone overtime again, as usual. Those of you who are still with us, I do thank you for your forbearance and look forward to seeing you at the next tutorial, webinar, I should say. Do send me your questions, please, by email to jneedham@thedanielcode.com, and we'll be happy to prepare whatever's needed to meet your requests. Bye-bye for now.